Hi, everyone. It's Lee Goldstein, the Trading Director at 10 Minute Trades, and I want to welcome you to podcast episode 38. That's a lot of podcasts. So here's the presentation screen, a recap of August 14th through August 19th. And I want to do it a little bit differently today. To be honest, I'm a little bit bored with the podcast. And I'm just bored because I've been doing it the same way week after week, doing a weekly wrap up, telling you what happened. And I think this week I'd like to talk a little bit about lessons. Lessons that I struggle with, psychology that I deal with, that all traders have to come to grips with in order to try and make as much money as possible and be successful. So, like I said, I want to talk about lessons. I've got my little list here that I've printed out of the events of the past week. And I want to talk about them and try to come up with a lesson for almost every event. And that's what I'm going to do. So we'll change it up a little bit today. But let's get rid of the gigantic elephant in the room. The two trades that I wish I could take back. Friday morning, I entered the gold open long. It was clearly a short. The market had been down, and it's a real simple lesson. Besides misreading the signal, which is something you can forgive yourself for, and that's okay. Sometimes you're going to read a signal incorrectly and go in the wrong direction. But I was harried for time. I knew I had to leave right away. I knew there was an a Canadian retail sales report, and I was rushed. And we know the rule: when you're in a rush, when you're distracted, at least trade the micros. So if you're not, 100% all there on your trade, you protect your assets. And I broke the rule and I got stopped and I lost money. And I felt bad leaving the room immediately with a bad trade in a rush. And I didn't get to thank everyone that was a trial member. So we're going to address that in a way. And I do want to thank all the trial members that came to the room this week. The second elephant in the room was natural gas. A lot of people watched natural gas. It was a monster, crazy, out of control trade. It was a stop out, and but you have to understand what happened. It might have been a stop out no matter what, because it was very volatile. The index was volatile before the trade. It was moving up and down probably way more than our bracket of 20 ticks. Our adjust button, when it's used perfectly, allows you to recenter the bracket a couple of moments before the trade. But if you press the adjust button at the wrong time, like I did on natural gas, the orders might not show up. They might not be placed properly. And that's what happened. So that's why natural gas was a particularly lousy trade. That's the elephant in the room. The other good side is people are still making quite a bit of money on the market opens. Just because I have a bad trade doesn't mean that you're going to have a bad trade. And that's a tremendous value of our trade room. Using us for information, using us to watch our indicators, using us to grab our trade setups. The trade room is a fantastic place to spend your time. So let's go through the week. Couple of lessons. Japan GDP. We don't normally trade the Japanese news. And this lesson is, don't forget to go back and look at an instrument that hasn't been moving on market news to check and see if it is moving now. Maybe the yen is moving on Japanese news, and we'll keep a closer eye on it because it looked like it did move on Japanese GDP Sunday evening. Walmart earnings was Monday morning. I wasn't able to be there Monday morning. And that's an earnings trade that clearly moved the YM, the NQ, and the ES. So we're definitely going to have a trade for Walmart coming next quarter. In general, I just want to be clear, the gold open, the oil open, they're working well still. Of course, there's going to be some stops, but people in general making money on those reports. And we're going to add something new. We're going to start trading around the opens. We see all the time so many extra opportunities before the open trade that we take, after the open trade that we take. And I mean after just a couple of minutes, but before it could be, we get to the trade room half an hour before the open, 20 minutes before the gold open. There are opportunities in those time periods before. So if we're trading a full size contract on the market open, we're going to open a second possible trade using micros live coming next week. So extra opportunities. So you definitely want to spend more time in the trade room to see how these opportunities pan out because they're going to work. Empire State Manufacturing was a report I didn't watch. The lesson there, especially in these volatile, inflationary times we live in, watch almost every event because you're going to be surprised. And Empire State Manufacturing, while it wasn't a fantastic impact, it just reminded me that the lesson is watch everything if you want to keep finding extra trades. Don't slack off. What's a TADE? I don't know, but I'm not going to trade one. Okay, then we go into Tuesday. Canada's core CPI definitely looks to me like a trap trade. Building permits and housing starts US. That's a report. I wouldn't trade it. There's not much of a good impact. The API crude report. It's been troubled for a couple of weeks. It's due for a great one. So I would absolutely look forward to trading it next week. I think API is going to have a couple of good reports. And our faced trade of the week, our first really good trade of the week was the Australian Wage Price Index. It was a family money trade, and it was a nice winner. That was in the evening on Tuesday. And then there's a lesson with the New Zealand rate decision. It was right after the WPI for Australia. We knew that New Zealand has liquidity problems, but I let my impatience get me out of the trade too early. If I just sat and relaxed, kept my stop, New Zealand would have been a very nice trade. So I believe New Zealand might have a few good events to trade. The rate statement, definitely. CPI is something worth looking at. We'll take a look at retail. That's probably iffy. GDP, very good possibility. So, because those are quarterly reports, CPI is a quarterly report for New Zealand. So, years ago, there was no liquidity on the New Zealand dollar. 6N is the symbol. Nowadays, there is better liquidity. It's not phenomenal, but it's tradable. It looks to be. All right. And we'll see by trading a few more New Zealand trades live. Wednesday, core retail sales. This is a setup that unfortunately hadn't been working. We've been trading the trap trade with gold. Trap trade is a specialized reversal trade. The idea is we put double brackets above and below the current price. We expect the price to go up and we sell the market. Or if the price goes down, we buy the market. It's been making money just barely as a trap trade for the past 6 or 7 months. And we've been tired of just eking out small profits. I had a couple of new setups. To make a long story short, the trap trade was mind boggling. It was an easy $1,000 trade on the gold retail. The lesson here is we didn't do anything wrong. Don't drive yourself crazy if you don't trade a report because it has lousy performance for 4 months. Just don't give up on it prematurely. And obviously, because it was such a monster trap, we'll give it a few more months to see if we can grab a couple of other trap trade winners. It has been a trap trade of the month, but quite a few months ago. Key is don't beat yourself up if you leave money on the table because you were too conservative. 20-year bond auction, another exact situation, a trade that's been awful. No ticks of movement, minimal profit. I've been tired of getting stopped out on the bond reports. I didn't trade it live. One of the best moves I've seen on a 20-year bond auction, maybe since we started trading it. These bond reports, I think you have to bite the bullet. Trade at least one contract no matter what. Every now and then. You know what? There was a really big lesson that I forgot. Trade the bond reports on Fed Wednesday, minutes or statement. Trade the bond report if there's pre-trade movement. Both things happened. I don't know where my brain was that day, but I paid for it in frustration. Okay. Right after the bond report, we had the FOMC meeting minutes. That's a setup that for one full year didn't have one profitable trade. It's pretty amazing, not one. So we were trading it with micros. We have a new setup. An NQ breakout looks great. So that's going to be, maybe we found ourselves a good setup for FOMC meeting minutes. The NQ breakouts starting to work. So looking forward to that next period. It's not always a monthly trade. Then we had the Australian jobs report. This was not my best week. I'll tell you the truth, not my best week. I've been thinking incorrectly about the Australian jobs report. I've been thinking like a newbie. Shrink the stop, shrink the stop. I should have been thinking it's a volatile trade at times, lots of reversing. Make the stop bigger. What am I thinking? Make the stop bigger. If I made the stop 4 ticks bigger, it would have been a profitable trade. Next month, you think I'll have a bigger stop? I think so. Thursday. Thursday unemployment claims. I've got a new setup for Thursday small reports with jobless claims. So we'll be looking at that next week. Not going to tell you what it is. Coming to the trade room. Existing home sales. That's a report. Probably shouldn't bother trading it for a couple of months. It just belongs on the bench. It's not moving, no impact. And then we already talked about my favorite, and it is my favorite report of the week. No joke, natural gas. I'm profitable on natural gas. I lost money this week. I made money last week. I've made money 2 weeks ago. I've made money week after week on natural gas. Yes, you're going to have some losers, but until it shows me that it's not tradable, I'm in the game for natural gas. I'm a complete optimist. Next week's going to be an awesome week. A lot of good trades. So just to highlight a couple of good ones next week, we have 3 family money trades, core PCE, personal income and spending, and I'm not going to tell you what trades they are, but if you see me in the trade room at 3 in the morning Eastern time, you probably should join me because that means it might just be a family money trade. This is Lee Goldstein, the trading director at 10 Minute Trades, podcast episode 38. 38. I'll see you next week in the trade room. Take care, everyone. Hope you're having an awesome weekend. Actually, it didn't start yet. We're sending this out on Friday. Hope you have an awesome weekend. See you next week.